Hello, guys. Welcome back to UCL Forest Academy. Welcome back to UCL Forest Academy. So, once again, you are welcome back to our academy. So, in today's lesson, we'll be talking about point of interest, and you already know that this very particular topic is under the market structure lesson that we have been learning all this while. We have already made the first video, the second session of the video, and the third session of the video, the fourth, and this is like the fifth session. I always encourage you to go through those sessions one by one so that you will not be found you will not be confused at the very particular stage. Okay, so try and go through all those particular what videos because it's tailored in a way to enable you to understand the forex market very well. Okay, so now before I begin this very particular video, I want to tell you guys that our online class registration is still running. All you have to do is to use the number on the description below to join or to reach out to us on WhatsApp. When you reach out to us on WhatsApp, we're going to show you the procedures or tell you the procedures to follow to be part of a particular what academy. So it's not like your usual academy or it's not like your usual online class where they drop videos for you or they call you on Zoom call and then you'll be there whiling away your time. At the end of the whole day, you won't even understand anything. Maybe they send videos for you. Nobody is reaching out to you. Nobody cares to understand whether you understand or not. It's totally different here. Just understand that the moment you enroll, the moment you have access, a private access to your mentor, who you will always ask a question on what you don't understand, and he will directly send you a video. It doesn't need to send to everybody. It all depends on who asks a question. And also remember that we have a strategic way to understand whether you did understood any topic we taught you because you need to pass the first topic before we move on to the next topic. So this is what enables us to know whether you understand that, and I believe that that should be what you are looking for. The fact that you didn't understand and the Mr. A understand does not mean that we are going to force you to move over to the next topic because Mr. A did. No, we are going to work with you, keep trying our best to make sure that you understand that before we will proceed. You just need to understand that there's nothing to rush because we have your back and it is a lifetime access. That's number one thing. We don't really, it's not like after 1 month or 2 months we are done with you. We understand that this particular forest requires a lifetime guidance. Forget the fact that you come to YouTube, you see videos. At the end of the whole day, you go back, you try to do all those kind of things. It may work the first time or the second, but you just need somebody that you can be having conversation with. Somebody will be sharing all those particular setups, or maybe you share what you did. Is this thing right? Did I did it well? The person will now guide you with another video, or maybe the person can call you, try a way to make sure that you understand that part. That is what you need. Anything you are doing in life, you don't have a mentor. You are prone to work. You are prone to having a very big error, and you just need to work. You just need to try that. Okay, so reach out to us with the number you are seeing on the screen. We are going to show you the procedures to join our online class. Okay, for those in my YouTube community, you can see this is the VIP content being shared for free. Just locate the playlist. This is here. Locate the playlist. It's going to be market structure VIP lesson. So locate it here and then click on it. You're going to watch. Maybe this is the first one you are watching. Please pause, go back and find my playlist. Click on the channel. It's going to direct you to the particular what playlist. Then go over to the go to the first session of the video and start watching to the end, like as in to the particular word stage. Okay, so please don't forget to like and subscribe. Have you liked and subscribed? Or check your channel. Have you like and subscribe, and then turn your notification button so that you'll be the first person to be notified by YouTube each time we drop a new video. We have posted a lot of quality tutorial videos here on YouTube that is meant to help you to understand how to trade forex. Okay, so just check it out, and then I believe that if not one or two of it could be of a massive helpful guide to you. All right, so I think we have to begin the video right away because we have delayed a bit, so let's begin the video right away. So when we talk about points of interest in the forex market, have you ever heard about somebody trying to tell you that I have a zone where I want to buy, I'm waiting for my zone? Somebody will tell you that I've been waiting for this zone for like 2 days. Somebody will tell you that it's not the right time for me to go in for a buy. I think I have a place I'm looking at to go in. So when you hear people talking about this kind of thing, it means that in the forex market, This is a specific price level or a zone where significant market activity is expected. This is a zone where a lot of people, a lot of traders, a lot of buyer or sellers traders are looking forward to going for a buy or for a sell. Do you understand? This is where everybody felt that this is going to be an activity, or there's going to be a reaction from that very particular zone. Now let me still give you more example. You rented an apartment, they gave you key, and that apartment has two doors. It is the first door is the front door, the other one is the back door. So it's either you can go through the first door, or you can walk through the back, like the you can move to on the backyard and gain access to the building. Do you understand? So now when you see those two doors, let's say you left for work and you came back, for you to gain access to the building or for you to gain access to your apartment, you need to open or you need to unlock the front door so that you can gain access to your apartment, then start moving from one room to the other, from the dining room to the sitting room to the kitchen to the toilet, to the different section of that very particular work apartment. You see that first door that gain you entrance, that enable you to gain entrance into that very particular building, it's where you are being expected, is where you are being expected what to pass through. Do you understand? Because you can't pass through the window, you can't pass through maybe through the what else? What kind of place? Like you can't pass through the, let's use that word. You can't pass through the window to enter into the apartment. You need to pass through either the front door or the back door. Okay, so that is it. So that is where you are being expected to pass through. So in the forex market, we have a zones, or we have the places where a lot of people are looking at to go in for a buy or for a sell. Do you understand now? So then we have what we call uh, unmitigated zone and mitigated POY. Okay, we have what we call unmitigated POY and mitigated POY. So what is this really, this mitigated POY? You just need to understand. Let me explain more of this POI before I explain this unmitigated and mitigated POI. Then you also need to understand that these zones are typically supply or demand or order block or areas of consolidation. These are like several English names you can call one particular thing. You can call it a zone, or you can call it a supply or demand depending on the trend. You can call it an order block, or you can call it an area of consolidation, or if that is not okay to you, you can call it where institutional players like smart money has left a footprint. It all depends on the English name or the terminology that you are very good to pronounce. Do you understand? All these things are the same. So we'll be talking about the unmitigated POI and mitigated POI. When we talk about what is unmitigated POI, we refer to a price zone where the market has not returned after a strong move away from that very particular place. I repeat, this is a unmitigated POI refers to a price zone where the market has not returned after a strong move from it. These zones are often represent unbalanced price actions or areas where institutional orders may still be active. Now, when you look at this whole diagram, the market moved to the upside, printed a new high, and then the market pushed aggressively to the downside. So look at how the market sold massively to the downside. This is what I mean after a strong move away. After what? A strong move away from that very particular zone. So where is your unmitigated zone? Your unmitigated zone is still that higher high and that higher or that higher low. Sorry, your point of interest in terms of a downtrend is your higher low. Your point of interest in terms of an uptrend is still your higher low. I mean, we have this as higher low, right? We have this as higher low, and in terms of an uptrend market, when the market prints a new high, it will always print a new low that will break a strong to the upside, right? So we have here as well as your higher low. So these are like if you say that you want to follow the trend, these are where your point of interest what are. These are where your point of interest are. So the reason why I call here an unmitigated point of interest is because this is a zone where price has not returned, where price has not come back. Price has not come back. This is like a strong move away, and price has not really come back. Remember what I told you, that this is a place where the market has not returned. So the moment price returned, let's now go to mitigated POI before we explain more of this very particular unmitigated. So when we talk about the mitigated POI, this is a zone where price has returned and filled the imbalance completing any institutional what activities. Once mitigated, the POY may lose its significance as an area of interest. You need to understand it again this way. This is a zone where price has returned, where price has what has returned. But the other one is where price has not what, where price has not returned. But this one is where price has what returned. So and filled the imbalances, completing any institutional activities. So the moment price now comes back to a particular zone this way, the moment price comes back to this zone and start dropping to the downside, it means that this zone has been what has been mitigated. This particular zone has been mitigated. It has been taught. It has moved from unmitigated to what, to mitigated point of interest. The characteristic of this mitigated point of interest, that is whenever price mitigates a zone, is this: retest completed. Price revisits that POY often forms weak or consolidation. Let's say if price is coming back again, let's say if price is coming back, then price decided to mitigate a POY that it has already touched before. There's a higher tendency that price will want to spike above that zone to collect all the stop losses above that very particular zone. There's a higher tendency that price will spike above that zone to collect a lot of stop losses of all the pending orders. Okay, so another thing about this mitigated point of interest is that institutional orders have been filled. You know that we follow the institutional traders. We try to follow the way they trade. We try to understand where they are looking forward to going for a buy or for a sell. We don't want to go. We don't want to go against the trend. We don't want to go in the direction that they are not what they are not going. You understand? On the direction they are not taking. So we need to follow their footsteps. All right. So the second part of it is that I say that these institutional orders have been filled. The revisit is considered to clear unfulfilled buy or sell. So it reduces probability of reaction. After mitigation, the zone is likely or less likely to cause a significant reversals or reaction. So like if price has already mitigated it before, there's a higher tendency that if price is returning back to that zone, it might fail. Okay, so, but when we talk about the mitigated point of the unmitigated point of interest, the characteristics of unmitigated point of interest, number one is that there is no retest. There is no what? There is no retest. Now where is your new unmitigated point of interest? That higher low, you can see this is your new unmitigated point of interest. So there's no retest. There's no what? There's no retest. The retest, I mean, there's no price returning back to that zone this way. There's no price returning back to that zone. There's no retracement. There's no mitigation. There's no pullback. Do you understand? The second one is when we talk about there's no retrace, there's no retest. Actually, I mean, price moves impossibly away from that zone without coming back to test it. Then the second one is there's a sharp move to the downside. There's a what? A sharp move to the downside. It could be a bearish move or a bullish move. So why is this unmitigated zones very important and why you need to understand these unmitigated zones? The reason why they are important is that these are zones that often attract the market back. These are zones that often attract market back because of unfulfilled institutional orders. These zones often attract the market back after or because of unfulfilled institutional orders are like spending orders and the rest. Traders watch these zones for a potential entries. Because this zone has not been tested for some long period of time or for some time, there's a higher tendency that price will have to come back to rebalance or to test that area to start dropping to the downside. Always remember what I told you guys at the beginning part of the particular lesson, where I told you guys anytime that price print a new high, it need to come down to print a new low. Each time that price will print a new lower low, it need to come back to print a new higher low. This is just like two things. All of them are all the same. Okay. So now the moment price now return back to that very particular zone, it has moved from mitigated to what, to unmitigated. Now there are things I want to tell you. At the earlier stage where I defined the POY, I talked about it could be an area of consolidation. Now there are before you mark out a POY, you can actually mark out a POY with a Fibonacci retracement tool, or you can mark out a POY by mainly marking out the last candle that led to that BOS, the last candle that led to that BOS, or you can mark out a POY by maybe the candles that consolidated around that zone. Now I'm going to show you the 3 steps of marking out a POI. And there's another type of marking out a POI which I normally use every time, which I call a hidden zone, which maybe later on I will make a video about hidden zone, and then I will, if maybe I might repost it here on YouTube, or maybe it might be for the VIP community. Everything is not to be shared for free. That is why I encourage you to find a way to enroll into our online class. It doesn't cost you much. It wouldn't cost you much. Just 75K as a Nigerian, and somebody residing out of the country, just 80 USD. It's not much. It's not much. Just know that you are going to gain more than what you are seeing here on YouTube. Think about somebody mentoring you privately. Think about you having access to your mentor, and you asking questions here. You, it doesn't take time, or it doesn't come call you on Zoom call and then waste away or waste your whole time. And at the end of the whole day, you have nothing to understand. We don't even condone those Zoom calls. We send you recorded videos, and we keep on answering your questions with the recorded videos. And you will see that those recorded videos are more like you being in a physical class with us. Okay, we use different formats to make sure that you understand our lessons. Okay, so now, when we already consider that something has been mitigated, or like we have been talking about, like the 3 phase or the 3 ways you can mark out a POI. You can either use a Fibonacci retracement tool, or you can use the last candle that led to a BOS, or you can use where the market consolidated and mark out a BOS. All right. So now you see how you can use the last candle. Let's say the sellers are coming down this way. These are sell candles. These are sell candles this way. The market is selling like this to the downside. You can see a massive drop to the downside this way, and then somewhere around there is like a high. This particular place is the height of that very particular stuff, or something like a higher high. And then the market started pushing to the upside this way. The market pushed to the upside like this. We saw a big candle. This does not really, it doesn't mean the color of the candle. It doesn't mean whether it's a red candle or whether it's a blue candle, or whether it has a wick or whether it doesn't have a wick. Okay, and then finally price break above that zone. Then when price breaks above that zone, this is a full bodied candle. Then when you are being asked where is the point of interest here, now if you want to be marking out your point of interest with the last candle that led to a BOS, it means that this very particular candle here is your point of interest. Is your what? Is your point of interest. Like this is your point of interest. This particular candle here is your point of interest. Now, let's say that candle has a wick like this. Let's say it has a wick this way. If it has a wick, you need to cover up both the wick and the body. Both the wick and the what and the body. Now, when we go down to refining or doing our top-down analysis, when we mark out a POI, and then we'll learn how to refine the POI, to reduce the POI so that we cannot be risking more. Okay, I think on top-down analysis, we are going to explain more on that part. So, looking at this particular stuff now, this is what we call a point of interest, because this is what we call the last candle that led to this BOS. After this candle, we have this 1, 2 candles that break a structure to the upside. Now, let's say this around this particular zone, instead of seeing a series of candles like checkmate, the next candle formed, and then candles like they are consolidating around this area, choppy candles consolidating like this, consolidating. It's not going up, it's not coming. A series of candles around this zone. All you have to do is to mark out those series of candles. Just mark it out like this, mark it out like this, and extend it to the future. So that can be called a consolidated or a range phase POI. Don't worry, when we go to the charts, I think we are going to spot more of it. I'm going to spot more of a range phase POI. And then let's say you want to use Fibonacci retracement tool in terms of marking out POI. All you have to do is to plot the feed from the low and wait for the candles to start coming back, and then take it to the height of that particular retracement. Take it to the height of that particular retracement. Then you now concentrate on marking out your 78% fib level. Then when you mark out your 78% fib level, you will always see that that particular 78% fib level is still a point of interest, like on 4-hour time frame or on 2-hour time frame. So this is like the different ways you can actually mark out a POI. Should in case you cannot be able to use the last candle, or you cannot be able to use the consolidated phase candles, just save yourself some stress and then mark out with Fibonacci retracement tool. Now, let's say you want to consider for a sell, just like an inverse of this, just like an inverse of a particular thing. Like if this thing turned to the upside, something that look like this, and the market is dropping to the downside this way. Let's say we have a series of candles that came up like this. These are like bullish candles that came up like this. I like taking my time to explain things to you guys because I understand what is trading. I know how it means and what it means that you don't understand. Or maybe most of you that are watching me now could have a question and then you don't even know how to reach out to me, like these guys on YouTube. You don't know how to reach out to me. Don't worry. I believe that with my versatile explanation, you will definitely be able to have answers to your questions. Okay. Although if you still have any question, you can drop it on the comment section. I will still be there to actually reply you to help you in a way I can. All right. But you have to know that it's not everything that I'm going to explain to you because there are some things that is being limited. So in terms of the sell market, this is how it looks like. So where is your last candle? This is your last candle. You can see this is your last. Whether it has a week, cover the week. Okay. Now let's go to the chart to try to understand how to mark out our point of interest, how to mark out our bearish point of interest, and how to mark out our bullish point of interest. Whenever we are selling, we are looking for a bearish point of interest. Whenever we are buying, we are looking for a bullish point of interest. You could see that I'm entering from a point of interest. Whenever I mark out that rectangular tool, that's the place I normally enter. That's the place I do what I normally enter. So you see, I teach you what I know and what I'm doing. I'm not teaching you what I'm not doing. Okay. So now let's now check out a particular pair. Let's use USD CHF. Let's use another pair like I think I'm just trying to use a pair that can enable you to understand. Let's use GDP JPY actually. All right, so this is GDP JPY. Let's try to remove this very particular stuff. Then the thing you can see here on GDP JPY is that price is currently number one. We could see if you go to daily time frame, we will see that the market looks like it's consolidating at a particular phase. Then here we can see a massive sell. We see that we have something like a BOS around this zone. First of all, we have a BOS, we have a bullish BOS here. We have a bullish BOS around the particular zone on daily time frame. And then we have a point of interest here. This is a daily time frame mode. This is a daily time frame. I think I will even cover up how we can be able to refine it. Don't worry, we're going to be explaining how we can refine it. So this is like a bullish point of interest here. You could see when the market pushed aggressively to the upside, it broke above the particular high with a full body candle. Look at what really happened here. It broke here with a full body candle. Look at it. This is a full body candle. Forget the wick. The first thing we saw here with a full body candle. Then they tried to come back. Early buyers step in and took price to the upside. Then you might think that you have missed out on something. Then after some period of time, you see how price is returning back. Now price has broken all this low. Price has done one. Price has broken all this low. Price has broken a major structure low. And this structure low looks like a change of character. It's not even looks like, it's a change of character. You can see the moment price started coming back, price has broken a major structure low. You can see the full retracement price give before started dropping again to the downside, and price has now broken this very particular wall, this very particular low. So with all these things you are seeing, it is likely to tell you that price is heading to respect the very particular point of interest that it has not touched for a long period of time. This is a daily time frame for crying out loud. This is a daily time frame, and this is a what we call an unmitigated point of interest. Price has not touched this zone. Price has not what? Price has not touched this zone. And with what you can see, this is a major structure change of character. This is a major structure change of character, and this is a major structure BOS. Okay, this is a major structure BOS, and now we can see a retracement to the downside. Now let's now concentrate on how to start marking out a POY that has been mitigated. Since this is what we call an unmitigated POY. Now the POY that have been mitigated here, if you go to 4-hour time frame, this is that zone that price started dropping to the downside. All right, we can see all this push to the upside. The next thing we see a reversal here. We see a change of character that happened there. This is what we call a change of character, and then this is a change of character. And when you look at what is the last candle that led to a BOS, picture the very particular candle. Look at this candle. Before I mark it, let me expand it very well so that you can see. Picture the last candle that led to a BOS. Look at this last candle. The last candle, it has the longest wick above all this zone. It has the longest wick. Secondly, it is equally what the last candle that led to what a BOS. So all you have to do is to mark it out like this and then extend it to the future. You see how the market came back and respected it and started dropping to the downside. Can you see that now? So this is what we call a bearish point of interest. We call this thing what a bearish point of interest. So in case if you want to use your Fibonacci retracement tool, how do you do it? Since you have identified a change of character below, plot the fib from the high down to the low, and you're still going to see that that very particular candle is still your last what, your last candle that led to a BOS. Just at this time around, it is not the week, it is not the what, it is not the week. I think this week is where we are talking about something like a hidden zone, which this is a very good pattern of entry, but I think that is for another lesson, not for this very particular what lesson. So you can you can mark out this candle, or you can mark it the other way around, or you can mark, you can see this is a consolidation phase, POY. You can see how the market consolidated there before we spotted this last candle. Now we could see that what happened again here. From here, price dropped to the downside, respected here. After some consolidation, price pushed massively to the downside. So remember what I told you guys. Did I really tell you guys that your BOS, your point of interest must break a structure? You see, before you start marking out those points of interest, it must break a structure. It must do what? It must break a structure. The moment your point of interest did not break a structure, it is not a point of interest. Like this, price print to the upside, price retrace, price need to break above before you will start marking out a point of interest. Before you start marking out a what? A point of interest. Okay. When you spotted it as break, then you now mark out a point of interest. But if it did not break, you see something that look like this. Price printed a new high, price printed a new low, price now respecting this very particular previous high. Please don't mark out anything. There's no point of interest there. The number one rule is that it must break a structure. It must what? Break a structure. So what we can see here is that after price respected our point of interest, he sold around here, price started consolidating. Price started what? Consolidating, and we can see the sharp move to the downside. When price moved to the downside, it broke a structure. Where is our point of interest? Our point of interest is just around this zone, which is this last candle that led to a BOS. This last candle here, you can see that last candle here. I'll try to keep it this way. So look at that very particular last candle that led to a BOS. We see how price returned back, and immediately price mitigated it. This is an unmitigated zone. Immediately price mitigated it. Price pushed massively to the downside. Then ask yourself, why didn't price return back to this very particular previous mitigated zone? All because price has already mitigated it before. Why did price not come back? As in, why this thing didn't come back to here? That means that price has already touched it before, so it has lost some liquidity. That it has, like, there's a slim tendency that price will return back to that. So we see how the massive push. You can see how the massive push to the downside. From here, price keeps selling, oh, and then price now break a structure. So where is our new point of interest? Where is our new point of interest? Our new point of interest is here. This is our new point. This is the last candle. Look at the last candle. This is our last candle that led to all this massive push to the downside. So we're going to mark it out this way. And then we now have to extend it to the future to know whether a time came, whether the market came back to that zone. So we could see a very painful one. When the market came back to that zone, the market tagged out everybody. Something like this normally happens. Just be rest assured that is for trading for you. So you see, when the market came back to that zone, market tagged out everybody and then sold. Some time came to see how the market kept dropping again to the downside, and from there, price too. You could see what really happened is that they took you out and still went to your direction because your intention was to sell, your directional bias was complete, your intention was to sell, and they still met that's your what intention. You see, after they took you out, took you out, and then they sold to the downside. So when they sold like that, where is your new point of interest? Because this is our unmitigated zone. Some of you will ask me question, why didn't I even spotted a point of interest here? Was it that the things here was not really valid? Remember what I told you, you have to look out for unmitigated points of interest because that zones has a higher probability to work, to play out. That zones will have what? A higher probability to play out. The moment you are marking out a zone that has already been mitigated, so when you see when price break a structure, they try to come up. Some early sellers took it down. So already I have an unmitigated zone. There was no need to be looking at all these things. These are like failed retracement. So the moment I see that price is doing this kind of thing, I just have to leave the chart and go to other pair. I just have to do what? leave the chart and go to other pair, leave this pair and go to other pair, and start looking for an unmitigated what zone. So now we see all the retracement price came, tag us out, and still went our direction. And then we could see after this thing, we spotted an internal structure change of character here. Look at it, this is an internal change of character. And we still have a bullish point of interest here as well. This is a bullish point of interest here. This was the last candle that led to the particular BOS here. This is the last candle. Now, even let's try to study the market from this particular place. Here that the market reverse, we have a change of character here. Let's use to our time frame. So we have a change of character around this zone. We have a change of character here. So let's delete this particular stuff. So we are really this is the real trading. Now we have a change of character around here. This is the change of character. And if you are being asked where is your point of interest, remember what I told you is the last candle that led to the BOS. So this is the last candle. So most of us that wanted to take a counter trend was waiting for this retracement to come down here, but price failed to come down. Instead, price pushed aggressively to the upside and still broke a structure. You see, it broke a structure like this. The next thing we see price now returning back, respecting this last candle. Just train your eyes to see something here. Can you see that last candle here? Can you see the last candle? If you have seen the last candle, congratulations to yourself. The mentality is currently being changed. So look at the last candle here. This is the last candle here. And see how the market tap into that last candle and it's now pushed to the upside. So as the market tap into it, it pushed aggressively to the upside and broke another structure. It broke another structure to the upside. Remember, whenever price break with a wick, not really a break of structure, not really what a break of structure. It's only when it break with a full body candle is now when we have to consider it as a break of structure. So now where is your last candle again? So with what I can say here, I'm going to mark it out like this because this is the consolidation phase candles. This is like a consolidation phase candles. This is how it looks like. You see. So we're going to mark it and extend it to here. This is already a mitigated point of interest, and this is our unmitigated point of interest. So we see when price break above that zone, price retested, break and retest strategies playing out. The next thing again, we have a BOS. So after that BOS, we now have a new point of interest here as well. And we could see how price tap into that zone and bought to the upside. But just don't forget that this is just like a support turn resistance. Okay, this is like a support turn resistance, and we still have a zone here, and we can see how massively price pushed to the upside. I'm just like showing you how to mark out a POY. Okay, so now you can see another BOS to the upside again. And then where is your new point of interest? Your new point of interest is this particular week, which I wouldn't want to explain. This is what we call a hidden zone, which I will still explain maybe later on for those in VIP community. So we see how price push to the upside, retrace, push, massively price now has broken a structure to the upside. Let us see. So this is it now. See how price actually broke that very particular stop. A time came, price give retracement, mitigate here, and now push massively again to the upside, and now broke another structure like this. It's another structure, okay? So when price did that kind of thing, we can see that what happened is that price came back around this zone, and then price now started pushing again to the upside. But if a particular push could not break the particular high, this push could not what break the particular high. All of a sudden we saw it down, and then the next thing price now came back to that zone, came back to our unmitigated what point of interest. This is what we call an unmitigated point of interest. The next thing we see a massive push to the upside, and you shouldn't forget that this thing is what this is a change of character as well. So there's something I want you to know. In as much as you are looking for a way to buy, always try to compare what has happened in the past to what is really happening in the world in the future, because you don't really know whether this thing has hit a higher time frame key level, and that has made it to change the character. And you keep your mind that I want to keep buying. Always be rest assured of what you are doing. That's why you need to go to a higher time frame to picture the bigger to see the bigger picture, so that you know where to go in for a sell and know when to go in for a buy, so that you can follow the trend well. If we zoom out from here, you will see that what we were actually doing was a retracement. Was what? A retracement. After the market took out a major structure low, we knew that the market is going to retrace, and that is why all these things are what? Are counter trend. So you could see when the market jammed the higher time frame key level, it's hard to forcefully change the character. But luckily for you, it mitigated your own mitigate, it touched your unmitigated zone and still gave you a good risk to reward ratio. But you shouldn't also forget that we have another unmitigated zone here. It's what we call an unmitigated zone. This is what we call a range phase unmitigated zone. You can see this was called a consolidation phase unmitigated zone. All I have to do is to mark all of them out, mark it out like this. This is a consolidation phase unmitigated zone like this, and keep it. So see how price, immediately that price from that consolidation phase, it pushed to the downside, gave you internal structure BOS, and the next thing, price tried to get there, price could not get there. The next thing, price dropped to the downside. After some period of time, price had to give full retracement, then touch it and start dropping massively to the downside. Just imagine that you are looking for a way to go in for a buy here. That means you have a personal issue. I think even if you have want to go in for a buy here, you should have waited for price to break the particular external high. But the moment you see that price has respected here, that should give you like a zero confidence to go in for a buy around a particular watch zone. So this is the point of interest here, the mitigated point of interest already, and now we could see price pushing to the downside. See what really happened around there. What really happened around there is what we call SMS. Now let me show you again. Now look at it here. Immediately that price kicks that very particular level, price printed a new low, price printed a new high. Next thing we saw price drop to the downside, even give us an internal structure what? Change of character. And then for those that normally love entering with a confirmation entry, this is what we call a consolidation phase candle. There is no candle that led, there was no last candle yet, because when we see the buyers took up, the sellers took the market consolidated here. So if I were you, I would just mark out all the way particular thing this way. I'll mark it out like this, and then the moment price touch it, you see how price drop massively to the downside. Okay, you see how price drop massively to the downside. So where is your new point of interest? Your new point of interest is here. Is here actually. Is here. You can see somewhere around here. And then you extend it to the future. So look at how the market kept dropping to the downside. Let's go back to 2 hour time frame. Let's go back to 12. So you can see that. So that's our point of interest. Okay. So this is our bullish, our bearish point of interest. So this is our bearish point of interest. So when the markets retrace, and the market has now broken that very particular what's low, you can see the market has now given us a BOS. So ideally we have to wait for the market to retrace. We have to wait for the market to do what? To retrace, so that we can go in for a sell around this zone. But we see after this thing, price came up, price came down. Don't forget that we had a BOS here. We had a BOS, and see this thing is still a range phase what? A range phase POY. You can see the market consolidated there, and then you can see that is a consolidation phase market. So I mark it out like that, and I extend it. So you see, after some time, we have price try to come up, next thing, and then we saw price respected it, and then start dropping again to the downside. So you see all those massive push again to the downside. Now you see, immediately that price kissed it, we saw the massive sell. Look at what happened there. The moment price touched that very particular zone, we saw price printed a new low. This low is more like a change of character that price has already did here. This is like a change of character, internal structure change of character. So can you see that? So the moment we see this kind of thing, price retrace and touch the last candle, which is this. Look at the last candle here. Immediately the price touched it, then price started dropping massively to the downside. Everything about here is probably is well mitigated. When price touched that zone, price printed a new low, price retraced, mitigated this zone again, price sold, consolidated, price mitigate again. Sorry, price break a structure this way, and then price return, mitigate this zone again like this. You see, mitigated the zone, and then drop again to the downside massively and break another structure. Now after some time, price now had to give some full retracement to touch this very particular one, to touch this very particular last candle here. You can see that After some time, price did full retracement, touch it, sold again, and then later on, price had to dip in again to touch it. Now, look at that thing I told you. Anytime that price has mitigated a zone before and decide to return back to that zone, there will always be a spike. Now, see, what really happened there is that we have this very particular unmitigated zone here. We have a very particular unmitigated zone here, and then instead of price to respect it, price has to spike above all those zones, collected all our pending orders, and sold massively to the downside. Can you see that? And then it has now given us a BOS. It has now given us what? A BOS this way. This is the BOS. Now the next thing again is to mark out there as our new point of interest. This is our new order. This is our new order block or a consolidation phase what market. So you can see it's already a consolidation phase market. After some time, you see how price actually gave full retracement, touch it, and has now dropped to the downside. We still have a very good mitigated POIs here. The moment price printed a particular high, it retraced and broke a structure to the downside, which gave us an internal structure change of character. Price had to retrace like this, mitigated the last candle, which is this candle here. He mitigated it. Let me expand well so that you can see. Look at that candle here. Look at that candle. Try to lock. Look at that candle here. Look at that candle. Look at that candle. This candle. So the moment price touched it, price now, sometime price sold and now broke another structure again. So now where is your new POI here? This is your new POI. Where is your new bearish POI? This is your new bearish POI here. Look at it here. So you see how price return back, test it, and still drops to downside. Where is your new POI again? This is your new POI around the particular zone like this. If you still don't understand this part, you can still make use of your Fibonacci retracement tool. Everything is going to be very simple. So we have a BOS here, and we see how price came so close to mitigate that zone, but price could not get there, and price had to break another structure. So this time around, when we get to liquidity itself, we'll try to understand whether we should be looking for a way to buy here, whether we should be looking for a way to sell, so whether we should be looking for a way to sell around a particular zone or this very particular what zone, because we learned that this is our unmitigated zone, this is our unmitigated what zone, and the two of them broke a structure. The two of them did what? Break a structure. So this is how to mark out your bearish point of interest and your bullish point of interest. So what about that part I said about refining a zone? Refining a zone, everybody that is watching this video, please, whenever you mark out a rectangular tool like this, if you mark it out like this, I want you to click on that rectangular tool, even on your phone, click on it. The moment you click on it, on your phone, you might not see a certain icon like this. Just click on these three dotted icons. When you click on three dotted icons on that your phone, just click on that very particular indicator, the rectangular indicator. A pop-up like this will come out. Click on that three dotted icons, which is for those that are using phone. The moment you click on it, it's going to redirect you to a page where you are going to see settings. Scroll down, you are going to see setting. Click on setting. When you click on setting, for those that are using PC, just click on setting straight. When you click on setting, come to style. For those that are using phone, when you click on setting, switch to style. Just click on style to just switch to here. Then activate your middle line. When you click on this good, it will activate like this. If I remove it, you're not going to see any middle line again. But if I activate it, you now see a middle line. Now, you need to understand that the half of the particular point of interest is already a refined zone on. This is a 2-hour time frame, right? If you go down to 1-hour time frame, the half of the particular zone is a 1-hour time frame point of interest. Is a 1-hour time frame what? Point of interest. The half of this zone is a 1-hour time frame point of interest. When you mark it on 4-hour time frame, the half of that 4-hour time frame point of interest is already a 2-hour time frame point, like it's a 2-hour time frame point of interest. Now let me show you some examples here. We marked out the particular POI here, or let's use the particular one as well. Let's use this one. We marked out this candle, right? Irrespective was a consolidation, it was a consolidation phase candle. Let's go to 4-hour time frame to see how that candle looks there. So when you see on 4-hour time frame, now look at that candle we marked out here. Look at that candle here. If you try to keep it this way, this was that candle that we reduced on 2-hour time frame. Look at that candle here. Let me try to delete all these things. So we want to understand how to refine, right? So look at it now. Look at that candle here. This was the last candle. Look at this candle. This candle here. Let me lock off this thing. I will have to remove this thing so that you are going to see that candle I'm talking about. So look at this candle here. Look at this very particular candle. This candle was the last candle that led to this very particular internal structure BOS. Although you cannot really see it here on 4 hour, but it was like an internal structure what BOS on 4 hour time frame. So the half of it now is a 2 hour time frame what point of interest. Now when we get down to 2 hour time frame now, you will see that the 2 hour time frame candle is here. Look at it here. So although this one really didn't correspond well, but we can keep it this way. Oh God, what is this? We can keep it like this upon the candle close. See how the market mitigated it and pushed the downside. I need to get a cleaner one. Let me get a more cleaner one. Let's use all JPY. Let's use all JPY. Okay. So this is all JPY. I want to use this particular setup here. Let's use this setup. So look at this candle. Look at this candle. Look at this particular candle here. See this candle. Can you see that candle? This is a pin bar, right? This is like a pin bar. Those that trade candlesticks understand this is a pin bar. And see how it looks like on 4 hour time frame. Monitor the half of this particular stuff. Monitor the half of it. Now when we go down to 2 hour time frame, so look at that candle that was a pin bar look at that candle that was a pin bar on 4 hour time frame. Is now a full body candle on what? On 2 hour time frame. Even when I go down to 1 hour time frame, you will definitely see that. I want to show you guys where this thing really worked out well. Like, nice one. I think I've gotten it here. So looking at it now, when you go to 1 hour time frame, the half of that 4 hour time frame point of interest is already a full body candle. So most of you will want to say, okay, let me just enter at the half of it. The moment you enter at the half of it, it means that you have entered at the refined zone. You have entered at what? At the refined zone. So that is how I normally do it. I will just make sure that I activate the half of that point of interest, and then I enter at the half of that point of interest. Sometimes you may see me not entering at the half of it. I will just enter at the where the week started. All depends. Sometimes it's like all depends on how I just did the analysis. But you just need to understand that always the half of the point of interest is always your 2 hour time frame point of interest. Like this BTC setup now. Let's go to this very particular setup. So this very particular BTC setup. I think I need to use where the market played as well. You will get to see what I'm telling you. So looking at this BTC setup now, we have let's look at some candles that we entered from the half. Okay, look at the very particular candle here. Look at the very particular candle. Let me keep it this way. Look at this candle here. Look at this candle. This candle now is the last candle that led to all this BOS to the downside. When you scale down to 1 hour time frame, you are going to see that there is a candle. All right, I don't need to explain much. You can see the half of it now. The half of that very particular 4 hour time frame candle is already a 1 hour time frame what candle. So most of you will say, let me enter at the half of it. You just place your order this way. You place your order like this. You still got activated, and even when you do that kind of thing, you'll be risking more. You'll be risking little. Do you understand? To compare when you enter from the 4 hour time frame zone. So you see, when you enter from the half, you target to the external structure. So this is how you have to make use of internal structure. This is how to refine. This is how to refine your zones. This is how to do what? Refine your zone by activating the middle line, and at the end of the whole day, just enter from the half of that middle line. Always make sure you mark out the last candle. If you don't know where the last candle is, you can make use of Fibonacci retracement tool and then enter from the 70% fib level, then target to the downside. Okay, I believe that this particular video has already helped you to understand how to mark out your POY, both the bullish POY and the bearish POY. I think there's no more thing to that. If you have any question as a VIP student, don't forget to screenshot all those your questions as usual. Share it on our DM. You already have more videos that we're going to share to you that will enable you to understand the very particular topic in more complex manner. Okay, if you're on YouTube here, don't forget to like and subscribe. Don't forget to drop a comment. Tell me your questions, or maybe drop your questions, and also tell me whether you understood a particular lesson. If you did, like the video and share the video as well. Okay, this is where we're going to come to an end of this very particular lesson, and then in the next lesson we try to understand, we're going to be trying to understand this very particular period with this very particular scope, where we explain what is liquidity. Okay, we're trying to understand this very particular lesson. Yeah. Where is the lesson from? So exercise some patience. Bear with me. Don't worry. Everything's gonna be fine. Just step by step, we will definitely get to that level. So we have already covered a lot. We have already talked about the mitigated, unmitigated, and then we have known how to use the POIs in the forex market. Now we are going to be talking about the liquidity pool in the forex market, and then finally we will now talk about top-down analysis. All right. So if you have watched up to this extent, congratulations to yourself. You are getting more and more closer, and I know that at the end of this, you will definitely know how to analyze the forex market. Okay. Thank you, and may God bless you.